GDP numbers came in weaker than forecast. What are your thoughts on that?
Okay, so the numbers were a miss. Some might describe a pretty large miss, and I think that was largely down to an unwillingness, particularly on behalf of corporates, actually to invest. So the capital expenditure component of GDP surprised to the downside. Conversely, the private consumption actually surprised to the upside. So I guess there are there's a mix of takeaways, if you will. It's positive that there's a trickle down in terms of sentiment among consumers to spend a little more. Abenomics is clearly having a positive effect there, but there are some blockages as well, and by that I mean a lack of confidence by corporates really to open the wallets and start rolling out capex in any material way.
And how will the data affect Prime Minister Shinzo Abe's decision on whether to raise sales tax or not?
Well, actually, I think the GDP number, particularly the capex component, completely reflects concern over the sales tax issue. You will be aware last time it was introduced, there was an awful lot of debate, there was an awful lot of concern that it would kill the nascent recovery, which effectively it did. And I think this reluctance on behalf of corporates to roll out capital expenditure really reflects their concern. Now, I guess we're not going to know fully about what will happen to the sales tax until late September, early October, but already we're hearing variants. At one point, from one extreme, there's discussion that it could be abandoned completely. At the middle levels of discussion, as it were, there's a delayed timetable or a reduced component in terms of scale of the tax, and of course right at the end it's business as usual. The tax will be implemented along the lines that the BOJ wish. I sense that we will be heading more to the middle ground. I think that the tax will be less than expected, and I think it'll take a while longer actually to be implemented.
What do you make of China's earnings season so far? What have been the highlights?
Well, I think that the market probably went in a little too optimistic. Consensus was looking around 11 and 11.5%. We've been a little more conservative in terms of our expectations of around 10%. To be fair, I think that even as the earnings seasons unfold, we will see room for further disappointment. That said, the earnings expectations are substantially higher than what we are seeing, for example, in the United States in its second quarter earnings season, with earnings growth of maybe 3-4%. So there's an interesting relative outperformance in North Asia in general, China in particular, and to the extent we're seeing some views now that the S&P is reasonably valued at sort of 15 times compared to, for example, 13 times P at the beginning of the year. It may well be that if we do encounter a correction in the United States, as value seekers look elsewhere, some of these substantially cheaper markets in North Asia may benefit.
What do you make of the latest set of China economic data? And would that compel you to change your GDP forecast for the full year?
There seems to be some signs of stability in the mid-year economic data, which I think is leading to a growing opinion, particularly as the global economy appears to stabilize and grow, but leading to an opinion that growth in China appears to be bottoming. We've seen it in the services PMI, we've seen it in the manufacturing PMI, and obviously some of the concerns that we had, particularly in the interbank space, seems to have diminished, and corporate spreads seem to also have recovered. So I think from a market perspective, there's the view that systemic risk caused by the slowdown is diminishing, and I guess from a global perspective, particularly growth in Japan and the United States, there's a growing sense that we could be seeing something of a bottoming out in the China growth story.